you pull out your phone and you just write them down. You don't have to look it up right that minute, but you need to go home later and pull out all the words you heard today that you didn't know what they meant, or all the words you wanted to say but didn't know how. And you write them all down, and then you go home and you do a little hours worth of study. And very, very quickly, you'll be speaking that language.
So you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Johnny Catani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcatani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Johnny Catani, and I am joined today by Emma Powell. Emma has been featured on Business Insider and the Bigger Pockets podcast, say that 5 times fast, as well as many other programs and stages. She loves to talk and guest on real estate-related podcasts or events with a talkative, easy-to-interview style. As the owner-operator of Highrise Group, along with her husband of 25 years, Troy Powell, who have partnered on nearly 500 units since relocating to Salt Lake City 2018 after 20 years in Austin, Texas. As either general managers, capital raisers, or loan guarantors, they are parents of 6 homeschooled children, ages 24 to 10. Emma, welcome to the show.
Thanks for having me on. It's always good to hook up with local investors.
Absolutely. I was just about to say the same thing. Love that. We're basically neighbors. So you've been in the game for a long time, seen a lot. Talk to us, how did you get into all this and what led you to where you're at now?
We started out kind of as accidental or unknowing house hackers. We would buy new construction and new developments. Our first house was in Austin. I think we had 3 or 4 houses in Austin, and we would just move around every couple of years. We'd enjoy the appreciation, and I would cash out and then take that to the next house. And I was always trying to keep it for seller financing, like a lease option or something, because my parents did that with a couple houses when I was growing up. And so for me, I felt like, oh, that's a great idea to have some extra income. And then we just didn't know what we were doing. We didn't have a network. We didn't have any people that we could go to. I didn't know what a RIA club was. YouTube wasn't a thing. I just felt like, where do you get this information? Where do you get this knowledge? You read something like Rich Dad, Poor Dad, and you're left feeling super motivated, but now what? And even for me, reading Rich Dad, Poor Dad wasn't like a mind-blowing event because I already was kind of in line. I'd say that the only thing I didn't really agree with was all the debt. And I've since changed my feelings on that. So just doing that, we were able to build up enough equity in the last house that we sold in Texas before we moved to Salt Lake City in 2018, that we used that money to go start a real estate investing business, because we didn't need all of it for the down payment on our house here, because we were creative with our lending structure. We did a first lien HELOC, interest only, so it allowed us to put a very small down payment. But at any time, if we wanted to lower that payment, we could throw a bunch of money at it. And if we wanted to take the money out and make a higher payment so that we could go invest, that's what we did. So we just threw a bunch of cash in this house and then started taking it out gradually to go and buy investment properties. So we ended up with a couple of residentials just because once I found a network and once I found a group of people that were doing what I wanted to be doing, I knew I wanted to do commercial right away, but sometimes things fall in your lap. When you're looking for something specific, sometimes things outside of that lane will come along. And as long as they're not too distracting from your core niche, then I would take those opportunities. So I had a couple of singles, a double, a triple, and then we, that whole time looking for commercial real estate, found our first one in Idaho and near my husband's hometown, and picked that up early 2020 is when we finally closed on that. And then sometimes the law of the first deal, it wasn't my first deal, but it was definitely my first commercial deal. And that really opened some doors for me to do some more. And I had to make some decisions about how I was going to grow. How big did I want to grow? Did I always want to be doing a bigger, better property than the previous one? Or was I willing to do some lateral or even backwards, in some people's opinions, types of deals just to keep the deal flow going? So I decided to just keep buying, always be buying, dollar cost averaging. I'm a base hit kind of investor. So I would pick up things here and there, and some of them fit my investing thesis very well, and others were a little bit outside of that. But at the same time, you're not going to make a lot of progress if you're so narrowly focused as a beginner. You really need to build up some sort of base and foundation, and the pyramids are always wider at the base than they are at the top. And so I would use that image in my head that it's okay to be a little more broad as I'm reaching towards that niche. And so it takes a little while to find that by doing one thing and one thing only, but also being open to opportunities outside that. So that's really how we ended up where we are today.
Wow, that's awesome. I love that so much. And I love that mindset where you were just willing to kind of take everything on, even backward steps. I don't really believe in, I think if you're doing deals, like everyone likes to classify, right? You have your like 10 to 20, and then you're 20 to 50, and then you're 50 to 100, then 100 plus. And people are like, oh, I won't do anything less than 100. But if the numbers are good, especially now, I'm willing to bet that people will take on different sized deals, just to keep the deal flow going. So I love that. So what I do have to ask, so what stuck out about Salt Lake City? Why from Austin to Salt Lake?
So my husband's in the tech industry. And so we ended up in Austin because of the semiconductor manufacturing. And then he eventually finished a bachelor's degree in IT and started working in IT and a data science. And so he got laid off a couple of times while we lived there. It's tech industry. That's how it goes. The first time we were lucky because his company was based in California. And so they had to give him 60 days notice. So he was able to leisurely go find a new job. The second one that he had was based in Texas. And so it was like you show up to work thinking you're going to work a full day, and they call you into the office and send you home early. So when that happened, it was panic mode. And like I said, our previous layoff wasn't like that. And I realized at that moment that how on the edge we had been living with a single source of income for basically a stay-at-home mom and 6 homeschooled kids. It was just a position to put him in that I regretted. I was doing a lot of wedding photography and real estate photography, but I couldn't really even pay the bills. So we had an emergency fund, and I was making enough money that I felt like we can keep ourselves for like 6 months without you working. But it was going to be a hard and stressful, desperately looking for a job 6 months, not a relaxing sabbatical like what we're looking at now. If he got laid off again, that's more what it would look like. And I told him one night, we were lying in bed, and I said, I am so sorry that I put you in this position, and I'm so sorry that I let this happen. And I promise you right now that I will never let this happen to us again. So when we got to a job offer, Salt Lake had a job. He didn't get a single interview in Austin, but he had 6 or 7 interviews in Salt Lake City, which is really unusual. And so if you believe in any kind of spirituality or fate, I felt like things were directing us here. He mentioned to one of his recruiters that he would consider Salt Lake City because at the time I was doing marketing for the Austin rugby team part-time in addition to my photography, and the rugby league is headquartered in Salt Lake. So he mentioned that, he said, my wife said would be willing to work in Salt Lake because she's in a niche industry and they have 2 opportunities there with the league and the local team. And he was so excited. He told his colleague, the Salt Lake City recruiter, and he was all over it. So sometimes things just happen for a good reason. And then we ended up in Salt Lake City, and it has probably the highest per capita of real estate investors in the country, and not as much commercial action going on, but I'm definitely seeing that growing and the fund management growing in the area. So I just jumped into that because when you go to a business meetup or some sort of networking event, there's always some real estate person there looking to raise capital or something like that. And so I was just coming across a lot of real estate investors, and I just decided to jump in, did some YouTube and Bigger Pockets type of research, came across all those resources. And I thought, oh, well, here's all this information that I've been missing for so long and a network of people who are doing it. And I'm a self-taught kind of person. And so I just jumped in with both feet.
Wow. I love that so much. That's amazing. Yeah. Salt Lake is slowly becoming a tech hub, right? We got Silicon Slopes now, as they call it.
Yeah.
Kind of a similar story for me as well. I was working in tech here in Utah, got laid off because of COVID, got into commercial real estate, had always wanted to. And it was just like you said, kind of fate where, Tate Seamer, obviously, found him on Facebook. He was looking for investors, ended up talking to him. He was like, yeah, we actually would like to have someone come and do kind of some like admin stuff. I was like, sweet, I can do that. And so the rest is history. Love those guys over at Greenlight. They're awesome. Sweet. Well, that's an amazing story. Sounds like you guys love Salt Lake.
Yeah.
It's an incredible city, especially if you're homeschooling kids. This is Definitely good place for that. So this has all led you to now you have the investment club. You're about a year into it. So kind of talk about starting that, where that came from, and what you guys are up to now.
Well, if we're going to go off the same analogy as the pyramid strategy, eventually you will focus in and narrow in on not only what kind of property niche you want to be in, but also what kind of skills niche you want to be in. And so you recognize your strengths and your weaknesses really fast, especially when you're working with partners. When you're a solopreneur, you have to wear all the hats, wash all the dishes. You have to keep the lights on. And sometimes you recognize there are things that you don't like or that you're maybe not as good at as other things. But when you have partners to take those off your plate and you're so relieved that you don't have to do that anymore, it helps you narrow in on those strengths and weaknesses a lot faster. And if your strength is something that you can leverage in the marketplace, then that's all you should be doing. So I'm not saying don't niche. I'm saying give yourself some time to work on one thing and see how it goes. You can always switch to another thing, but don't try to niche too early and don't try to get married to that niche too early, because things will evolve and things will change. And that's exactly what happened with me. I found that I was getting really burned out on asset management. I didn't like looking for deals because you spend hours just underwriting a lot of garbage, really, that's overpriced and is just not going to pencil. And unless you love being in the spreadsheets, which I do spreadsheets. I love spreadsheet design, but actually doing the research to figure out what numbers to plug into the spreadsheet, I found to be incredibly tedious. And anything that you're procrastinating should be something that you eliminate or delegate. And so I got to the point where I just recognized if there were things I was excited about doing and I got up and I would basically do them for free, or I would do them instead of doing something else that I knew I should be doing, but I would rather be doing this instead. That's how I really figured out what I should be specializing in. And for me, it's putting diverse groups of teams together, setting up systems, and coming in more as a middle person. Like somebody else will find the deal and somebody else is going to run the deal and sell the deal, but I'm going to come in more towards the middle of the beginning, put teams together, bring capital in, just get everybody lined up. I used to make jokes when I first started homeschooling. People would say, oh, how are you going to homeschool so many kids? I say, I need all my ducklings swimming in the same row. They all had different teachers. They all had different projects, different due dates, different forms, different fees that need to, and it was just a constant admin nightmare for me. And I'm not good at admin. I don't like it. And so I felt like the same thing with getting all my little ducklings swimming in a row with a club. That's a strength of mine. I can herd cats and get everybody on the same page. We can bring in good deals. We formed committees where people can volunteer where their strengths are. So I'm just focusing on marketing and education and making sure that things get done. And I have help with the admin. I have help with the underwriting. I have help with legal review, because those are where people can contribute and they're excited to contribute where their strengths are. We had somebody recently say, hey, I'm a commercial insurance broker. I can read the legal docs and I can read the insurance and I can do all of this type of super, in my opinion, boring stuff that I don't want to do. But when I said, yes, that would be so helpful, they were so excited that they had a place that they could participate and contribute, even though they had never done a commercial deal before. So let people perform in their areas of expertise and ways that they're excited to contribute. And if you get a big enough group of people around you, you can fill every task eventually.
Yeah, it's so true. That's why partnerships, like you said, are so important. And understanding your unique ability. You mentioned the procrastination. Sounds like Who Not How, if you've read that book. Mm-hmm. I think there's actually an exact chapter on procrastination, and all he says is procrastination is literally just you not wanting to do something. So you should delegate that task. So you've identified what your unique ability is. How have you applied that to the club, and what are your guys' goals?
Well, I spent some time, a couple of months, looking for this structure that somebody else had done. And I found a few people doing things that were like behind paywalls. And that was something I was really committed to, not having something behind a paywall. And the reason why is because I'm trying to retire, and starting some sort of a for-profit club business was really not in line with those goals. So once we are able to retire on our passive cash flow, we plan on taking some sort of a sabbatical and just thinking about what comes next. And so I was very reluctant to commit myself to any long-term projects. I didn't want to sponsor any new deals because let's have a 3 to maybe 7 year horizon that you've got to be asset managing and you got to be on. I don't want my husband to be able to quit his job, but then I'm working all the time. It's just trading one problem for another. And so with the club, it allowed me to take it one deal at a time, and it allowed me to get involved in a much less time intensive and labor intensive way into each deal. So the sliver that we get in each deal is a lot smaller, but the work it takes to get into that deal is commensurately smaller. So I will go out and find deals, but now I'm getting them from people who've already vetted them. I'm looking through a lot less garbage. And now that I have an underwriting volunteer committee, they're doing all the screening, and I'm just having to basically pay attention to what they're doing, but I don't have to actually do it myself. So that's how we've been building the club, people contributing where they are. But at the end of the day, whatever people are doing, we are all trying to invest in commercial real estate deals. Everybody's reasons to be in there are different. We have beginners who are looking to get in their first deal. Maybe they're really frustrated because they spent a lot of money on some sort of an education program. 2-3 years later, they still haven't done a deal because it's a pretty steep learning curve. It has a very high barrier to entry. I wanted to lower that for people because they would call me and say, hey, I have 50 or I have 200 grand. Let's go do a deal together. And doing these large commercial deals, that's limited partner territory, but they wanted to be joint venture partners. So in talking with one of my partners, who's also a securities attorney, he suggested the club model, the investment club model. It's kind of fallen out of fashion because you can do no cost trades and you don't need a group buy stocks anymore. But it really dovetailed nicely into what we were doing because people want to be joint venture partners, but you can't have 20 people in a joint venture, but you can have up to 100 people in a club. As long as they're all making their own decisions, nobody's giving paid investment advice, there's some rules you need to follow, then you're not dealing in securities. And the only real securities rules we need to follow are when we're partnering up with these larger deals to make sure that we're raising money legally, to make sure that we're partnering in the general partnership for a legitimate reason. In our case, it's for protecting the investment and participating in a little bit higher level than just a limited partner. So we have more say over what happens with our investment. So for us, the club has been a great fit. It's been a great fit for me time-wise. And it allows me, like I said, to take it one deal at a time so that when we finally get to the point where I say, hey, I need a sabbatical, I'm able to easily do that.
I love that so much. Yeah, I have not heard investment clubs since I was a stockbroker.
Yeah.
They definitely kind of went away. So I guess let's take a step back. Explain the structure. So I'm sure people who have no idea just think of a group of people who meet, but this is actually a legal structured club, an entity. So I guess just give us kind of a quick overview of what an investment club is.
So the meetup itself is not a legal entity. We just get together and we meet once a week. It's free. We look at deals together. There's no membership due or anything like that. It's just a meetup. Where the legal entity comes in is when we find a deal that we would like to pool our capital and invest into. We create an LLC on a website called TribeVest, TRIBEVEST, and we use them to handle our LLC creation, formation, maintenance. They have a bank account. They do our corporate governance. They have operating agreement templates that we can take to our attorney to customize, and we can do all of our voting and motions on that platform. And it's pretty affordable. So it's been really great for us. We've got 3 deals hosted with them right now. We're working on our 4th. And that has allowed us to have our legal ducks in a row very easily. So the club itself, the meetup with a lowercase c, I guess you could call that club, is just a free meeting. And then the capital letter club is where we actually form an LLC, put cash into a deal, and start participating in the asset management of that deal. And that will usually we've had one of our deals had only 5 or 6 people in it. And then we've had a couple others that had more like a dozen plus.
And the club is the general partner. Is that correct?
Yeah. So we all go in as individual limited partners on a 506B deal, because if you're not accredited, you can't go into a 506C deal, even if you're in the GP, unless you're accredited, with the exception being if you're some sort of an executive or managing partner, then you could be unaccredited. So when the way that we're coming in is a non-managing member, everybody in a 506C has to be accredited. And so usually we raise a little less money. We have a few less participants. So we would love to have more accredited investors in the club so that we can do more 506C deals. There are just more of them. And as a 506B, we all go in as individual limited partners. And then our joint venture, which is the club LLC, is what goes and negotiates for better returns inside of the general partnership. And because we're associated persons inside that general partnership, we can then go raise an incidental amount of extra capital. So if we can pool up, say, between 500 and 750 with club members, between 10 or maybe 15 people, then we can go out and raise another 250, something like that, from our own limited partner networks. And then we can go in with, say, $1 million, whereas we might not be able to raise all that in the club, but we can raise a little bit of outside capital from limited partners as well. And so it gives people a lot of options. Whatever your reasoning is, whatever the why is, why you want to invest in this, you could joint venture partner with the club. You could be a limited partner with the club. It allows people to get their goals met with commercial real estate at any level and any time or cash commitment that works for their goals.
Fascinating. Wow. That's an interesting structure. I can definitely see why in this space, it's not as widely used. So I guess talk about what it's like having that many people sometimes on one deal, and having to kind of navigate that. Obviously, like you said, everyone sort of understands their role and so has their own role, but is it difficult sometimes having that many people?
I haven't run into any difficulties with it yet, but people do ask that question a lot. And when they say, how can you handle doing deals with so many people? Or because even when I was the lead sponsor, I did a different partnership with every deal I did, because you put together the partnership that suits that deal, whoever has the time, whoever has the money, capacity, whatever. And people would say, how can you stand having so many partners? And when people start asking you questions like that, that's how you know where your superpower is, because it didn't bother me, because I didn't think it was a big deal. I thought, okay, I need to go and leverage this because it's something that's not normal and I can make use of that. If everybody is looking at what you're doing and asking how they can do the same thing, maybe that skill is not quite as valuable, unless they're asking you from the sense of they're amazed at what you're doing and I wish I could learn how to do the same thing. But watch for those cues and watch for those kinds of questions that people ask you, because that's what's signaling you. Again, it's not just a procrastination of what you hate doing. It's what other people are looking at. How can you stand this? Or how do you handle that? Spreadsheet guys get it all the time. Oh, I hate spreadsheets. How can you spend so much time digging into the financials and researching and diving into spreadsheets? And they hear that over and over and they think, okay, this is my magic that I can contribute. So for me, it's public speaking is a big one. I love to talk. I love to teach. I love to be in network, and those are the things that I'm doing. But I know that most people hate public speaking. And so I thought to myself, how can I leverage this to build my business? And then the podcast media came out and I felt like this is a perfect fit for what I enjoy doing. And I can leverage that into the business. It's the same thing with being able to get ducks swimming in a row. I think the club members would probably resent that I'm calling them ducklings, but.
Are you a big fan of birds? Are you a bird watcher? I'm getting a lot of duck references.
Yeah. So we'll talk about herding cats or spinning plates. We can analogize it however you want. The idea is that when people are saying, how can you have so many partners? How do you handle that? And I start talking about, well, we do this, this, and this, and this. And they're like, oh, okay. And you know that they don't want to do it. You know that they're not into it. And I feel like, okay, that's really where I should be spending my time. So what we do is we have a questionnaire that we had everybody fill out how we want to structure our LLC. And it's like, what do you do if someone dies? What do you do if people are having a personality conflict? What do you do if all of these things? How are you structuring the voting? What is the purpose of this club? How is the equity going to be decided? So it's just a plain English questionnaire. But then we were able to take the operating agreement template that we got from TribeVest and send the questionnaire and the template to our attorney. And then he didn't have to sit down and spend 3 hours interviewing us as a team, because we had already done it, spent 2 hours on a Zoom call, or once we've done it a couple of times, we don't even need that. Just fill the thing out and send it back. Once you are able to systematize those things and then just rinse and repeat, it gets a lot easier. So this current deal that we have, it's like, we've had our operating agreement template revised several times now. Here it is. Read it over. And if you're ready to sign it, then we'll upload it onto TribeVest and everybody will sign it. If you need some changes, send us a list and we'll get together and we'll meet and we'll go over these changes, and everybody has to agree on it. And here's the thing, nobody has to do a deal they don't want to do. If you have at any point say, I don't like this operating agreement, I don't feel comfortable with this, don't do the deal. It's not like a club where you have to put money in and then we decide as a group what that gets invested in, and you can only reject a certain percentage of it before you get kicked out of the club. It's a deal by deal basis. If you want to invest in it, great. If you don't, great. And if there's some problem that's causing you to not invest, if I could wave a magic wand and fix something about this deal that you were interested in, that you would invest, what would it be? Sometimes it's a problem with the deal fundamentals. Sometimes it's a problem with the way the club's operating. It doesn't matter. All of that feedback is valuable and helps us to refine our systems. So that's why I can work with large groups of people without a lot of problems, because we have great paperwork, we have great communication, and great systems.
Yeah, that speaks volumes, right, to the level of intellect of the people around you, where all of you understand your role. And so to the outside, it looks like, 14 cats in one place trying, like chickens with their head cut off. But in reality, it's, 14 people who all understand their role and stay in their lane.
Mm-hmm. And
things just flow when you have that kind of system and process in place. So for someone who's just starting out, right, the investment club may not be the way to go when you're just starting out, but it is but it also does present the opportunity to work with people who have been doing it for a long time. So if you are just starting out, what's a good way to figure out what your unique ability or superpower is, and how you can, be a good partner?
Well, the first thing you have to decide is, do you want to be a solo or do you want to be in a partnership? Because people ask me all the time, why don't you just take 100% of a flip or 100% of a single family rental? Why are you taking a sliver of a larger deal? And the answer to that is because that's how I want to spend my time. That's what I like. That's what I want to be involved in. That's what I want to be running. It has nothing to do with the fact that I think that commercial is way better than single or anything like that. Although I do think that there are some compelling financial and management reasons to.
I'm certainly biased.
Yeah. But at the same time, I know a lot of people who prefer running a wholesaling business, and they're killing it in the wholesaling business. And so they would be more suitable as a limited partner in some sort of commercial deal to be able to diversify, because they don't maybe have time to be thinking about, I need to take care of this and I need to take care of that. And it becomes death by 1,000 cuts when you take on too much. And so what people who are in a successful career, successful business, and we always think about like the doctors, lawyers, attorneys, putting cash into deals, but a lot of real estate investors are going to become limited partners in our deals because they already have their gig going. They already have their wheels spinning. So if you're a beginner, you need to think, do I want to have partners? And do I want to be active in that? What do I want to do actively? And what would be better to do passively? So let's take, for example, I will sometimes invest passively in somebody's flip, because that's another way for me to diversify away from the same asset type that I'm constantly doing. That's what being a limited partner gives you the opportunity to do, is to diversify in ways of things you don't have to run. So you have to ask yourself, where do I want to be active? And then where do I want to be passive? So as you're taking money out of the active job, flipping, surgeries, whatever it is, for me, it's digital marketers, because that's what I used to do. And that's my network. And so they'll be having niche websites or e-commerce stores, but because that's the language that I speak, I tend to gravitate towards my old career. A lot of people do that if you used to be in IT or you used to be a dentist. So for me, my digital marketing tribe is where they're doing their websites, they're doing their thing, and then they're spinning off that extra money and putting that into deals as a limited partner. So if you're a beginner, I think the club is still a great place for you to start, because we have a beginner extra meeting and we put up some educational videos. So you can come to the meeting, ask all the questions as newbie as you want. We also have one of the volunteers in the club will be in there, and he'll ask dumb questions on purpose just to set the tone so people feel comfortable.
I love that.
Asking whatever. Then we record them and we put them on our Facebook. So that we do that every Thursday. We'll do it in the 4-week series. And so we'll occasionally announce a beginner series. And then when you start coming to the meetings, and you might be totally lost on the Monday night meetings, because we're talking about real deals. We're doing real deals here. And so we're getting sometimes out into the weeds, depending on how deep into the due diligence on this we are. But if you're the kind of person who can handle drinking from a fire hose and you will do your homework afterwards, I say it's like learning a foreign language. You go to the country, you go to the shop, and you force yourself to speak that language. And when there are words that you don't understand, you pull out your phone and you just write them down. You don't have to look it up right that minute, but you need to go home later and pull out all the words you heard today that you didn't know what they meant, or all the words you wanted to say but didn't know how. and you write them all down, and then you go home and you do a little hours worth of study. And very, very quickly, you'll be speaking that language. It's the same concept here. We have a Slack channel where we can ask questions in between, and we have the beginner meetings where people can ask questions. So it is a great place to start. And it's a great place to put on some training wheels and see if this is really the best fit. We have had people come in there saying, how do I get into commercial real estate? And after a couple of weeks, or maybe even one, they've done a deal. They're like, I actually don't like this. And so how great is that they got to experience that for free? They were educated. They even did a deal. And so their money's invested in something great. But maybe they're like, they wanted to start a big syndication business and they realize, oh, I don't actually want to do that. Or other people get in there and they think this is great. And they just take off and they get really excited and they go out and start a syndication or capital raising business or some sort of a fund. So it's a great place to try this out on training wheels, even for very, very beginners.
I love that so much. Yeah, that's a really incredible opportunity, and not one that a lot of people talk. In fact, this is the first time I've talked about it on this podcast, but it's true. I mean, I can't tell you how many times, and I've talked about this before, but how many times I've learned something on an episode and then literally use that on the next episode. Yeah. Listen, fake it till you make it. All right. Everybody out here is just learning and making it up as they go. But
yeah. Sadly,
yeah.
Every deal is different. It's like having another baby. You think you know what you're doing by the time you get to kid 5 or 6, but then they're born and you realize, oh, this kid is different than the previous one. So they all have.
Is that why you kept having more? You're like, wait, maybe we'll get it figured out on this one. Wait, no, maybe on this one.
I honestly can't tell you why. I ask myself that question a lot of times. They're a lot of fun. It's a lot of work. And it has to balance out. And I think this is the same for commercial real estate. You really got to love it.
Yes.
And if you don't love it, just put money in it and go do whatever it is that you love.
When I first started, like I'm 2 years into this thing, year and a half. When I first started, I was like, everybody needs to do commercial real estate, some form or fashion, even if you're just a limited partner. Still am kind of on that page, but honestly, like, as long as you do something in real estate. Now, I'm very biased towards real estate. I think everybody should have that in some form or fashion. But I was all like gung ho. And now it's like, yeah, just get involved somehow. Mm-hmm. Whether, like you said, you're flippery, if you're a wholesaler, whatever it is. Like, I used to be like, oh, I'll never do wholesaling. Now I'm like, that's awesome. If that works for you, great.
Yeah. And I think that real estate has some of the best diversification opportunities of any asset type or asset class. And the reason why is because you have different operators that you can be investing your cash with. You have different locations that you can be investing in, either actively or passively, different asset types. And I'm going to use the term asset class to refer to the income level that the person who's either living or renting that building would be in. And like the workforce housing is for more low income. You have the middle income, which would be the single family home or the self-storage unit. And then you've got the high income, which would be luxury office buildings or luxury short-term rentals. So you're able to diversify so much wider than you would be able to, even in stocks. People make jokes like, oh, I've got growth stocks and I've got small cap, mid cap, and I've got a foreign fund. I'm like, that's not actually diversifying. So
oh my God. I only laugh because I can't tell you how many times I had this conversation with investors when I was a stockbroker, and I was like, yeah, it's super diversified. You're like, these are all companies, by the way, just so you know that.
Yes. And I think that I do have some paper assets. I do have some tech startups that I do. Obviously, I'm invested in the rugby team as a sports or new business startup.
That's cool.
I have. So we will throw a little bit of money. Some tech. TribeVest is doing a round of funding right now that I'm getting involved in, because if I know the operator and I know the business, I use the business, then we'll throw a little bit at it. Real estate requires a lot more cash. So I can go get invested in a tech startup for sometimes even $500, $10,000, something like that. You could go up 25,000, but I remember it's the first tech startups I started looking at, and they would say 25 or 50,000. I'd be like, whoa, that's kind of a lot. Real estate is hundreds of thousands of dollars. If you want to go raise money for real estate, you need to be able to raise millions of dollars. Whereas if you're in a nonprofit or a tech startup, if you can raise 300 grand, you're a hero. It's more risky. So real estate allows you to diversify much broader than anything else. And it's not a paper asset. These are backed up by, they call it real estate for a reason.
Hard asset. And no matter which way you're involved, the tax incentives are very much they apply to all of it pretty much, more or less, right? That's kind of a blanket statement, but more or less, the incentives are there. Whereas in the stock market, the incentives are not nearly as favorable. Not to say you shouldn't have that, or not to say you shouldn't have crypto and those things, but
you'll need a tax shelter eventually, and that's where real estate comes in. So I do know people, full-time stock investors, who start investing in real estate just because they need the tax incentives, the tax benefits. And some of them, if they're able to quit their job on, say, their earnings from their crypto or their stocks, then they have the time to declare themselves as a real estate professional, because they can go out and spend, it's like 750 hours a year, which is 10-ish hours a week. And you have to be substantially involved in the management of the passive income. So I self-manage my small portfolio of my singles and doubles for IRS purposes. If I ever get looked at saying I'm a real estate professional, I want documents and proof that I spend this much time and I'm substantially involved in the management. Because I have all this commercial, my property managers handle that. So once we get to the point where we have all passive income and no active income, then we no longer need that IRS designation of real estate professional, because all of our passive losses, which is depreciation, will offset our passive income. And if you only have passive income, you really only need passive losses. The reason that we do it the way we do is because my husband's a W-2 worker. I'm a real estate professional. And therefore my income, my passive losses, offset his active income because we are filing jointly. I think that's I would call it the trifecta, but there are only two of you. So that is like the holy grail right there.
Holy grail.
Active income being offset by the maximum passive losses. I get more passive losses because I'm a real estate professional full time than I would if I was a W-2 worker taking depreciation. So that's another thing to think about. If at least one of the partners filing on that tax return can be a real estate professional because they don't have another W-2, then you will maximize those losses. We got a free house last year because our tax return was so huge.
That's incredible.
That we used it to go put a down payment on a new rental.
You guys, we are not CPAs or attorneys, so this is not tax advice, but I'm telling you guys, I've done episodes. You can listen to the CPA episodes. Becoming a real estate professional. So just to like super high level, basically, if you invest in real estate, your depreciation can only go against your passive income. However, if you're a professional, which is like you said, about 750 hours towards, right? So this is like managing your Airbnbs, like things like this, which a lot of people are doing. Mm-hmm. You can then take those losses against your active income, which is what she's talking about. And but you can't do that in crypto. You can't do that in the stock market. Mm-hmm. So this is what we were saying is the incentives are just very heavily in your favor. And you're trying to build wealth and retire early, this whole FIRE movement. This is really the only way that I know to do it, that I've seen it be so successful so often. Not to say there aren't other ways.
Even stock FIRE people who are saying I became a millionaire in index funds, it's possible. I've seen it. I've heard it. They still hold real estate. They will still have a couple rental houses. They'll flip a couple houses. I don't know a lot of people who are doing it all in one asset class, nor should they be. It's too risky. It's like the trope of every bad novel where the rich relative puts all their money in a can't lose investment, and suddenly the whole family's poor and has to go out and have a journey to find their fortunes. And you read something like that and you think to yourself, why, if they were that wealthy in that experience, why would they put everything into one basket? Don't ever do that. But like I said, real estate can be a basket that holds maybe 80 to 90% of my assets because I can diversify so heavily within that. And because the tax incentives are so good.
Yeah, it's true. And just to say, like she's saying, there are other avenues for diversification where these are still there. Whereas the stock market, sure, you can diversify, but the IRS is blanketed on capital gains from the stock market, gains from the stock market, interest income is set how it is. And so yeah, so it's incredible. This has been amazing. I'm very, very intrigued by the investment club. In fact, I think I'm in the Facebook group, so I need to be more active. So yeah.
We have all the events posted there. I'm very anal about making sure that that events tab is up to date because I want people to be there. I want to help as many people as want to get into commercial real estate to actually do a deal. Now, one thing I can guarantee is that any money that you put in, every dime of it will go towards doing a deal. Now, I'm not saying you're going to make money on that deal. We could lose the property and lose everything, but you will have put that same amount of money into, say, an expensive education program or mastermind that may cost you 10, 20, 30, $50,000. And all you have at the end of that is the education. Here you can get the education for free, and every dime you put in goes into a deal. And you're never going to learn better than by actually doing.
That is 1000% the truth. I would put someone who's been reading and listening to books for 5 years up against someone who's been doing deals for 1 year. And I'll bet the person who's been doing deals for 1 year knows more.
Yeah. Yeah, it's a highly educational, and I recommend, so we have some people in there who I just would prefer to be a limited partner, which is totally great. But I usually recommend do one deal in the joint venture just to learn, just to see. And we have people who don't have time or any of that, so they're not ready yet, but eventually they'll do one deal and see it from the inside.
Subjectively, I think it would make you a better limited partner. Yes. Because listen, being passive in the beginning, there's still an active component because you should be vetting the sponsors and the operators that you're investing in.
Yes.
And that's the active part of passive is that. So if you do a deal as that person, you then get to see, oh, okay, this is what I should be looking for. And when I'm, going out and investing passively.
Yes, there definitely is an amount of due diligence that you need to be able to do. And I recommend people spend about 5 to maybe 10 hours researching this before they do their first deal. But that's not that much when you think about it. It's a whole lot less time than I spent doing my first commercial deal before we closed and now asset management. So the time savings is immense. But like I said, in the club, you can go in with the same amount of knowledge as a limited partner and be a general partner and at least get that on your resume. If you ever want to raise capital, you ever want to get a loan for maybe a 10-plex that you want to buy yourself, if you have these types of deals on your resume, it will really help to build your credibility with brokers, investors, lenders, everybody that you're going to be dealing with. And so you may have to show that you own 0.005% of an institutional 250 unit Class A deal. But having that on there, especially if you have 4 or 5 of them on there, that goes a long way.
Yeah, it's so true. So true. I'd rather have a quarter of a watermelon than a whole grape. So, yeah. See, I learned that on a podcast in here. See that?
If you can turn that into a duck analogy, you get extra points.
Just gonna say. We'll have to figure one out. I'm sure you'll come up with it between cats and ducks. Sweet. Well, as we wind down here, I've got 5 questions I asked all the guests, so we'll jump to those. First question, best advice you've ever gotten from a mentor?
Oh, this is so hard because you get so many good nuggets, and the best seems to be it has to be the number one thing.
Maybe one you apply the most.
Yeah, just get in and do something. That's probably why I built the club, is because I saw too many people spinning their wheels. And when I wanted to scale back, I also didn't want to just be spinning my wheels because I couldn't do a full deal. So just get in and do something, learn by doing. Once you're about 80% comfortable, jump in, because there's only so much you can learn by researching, listening to podcasts, reading books, even networking. At a certain point, jump in, and between 50 to 80% comfort level, just do it and put in the amount of money that you feel like, if I lost everything, I will at least have learned something. So I would say this piece of advice actually came from a friend of mine who taught me how to sew, because we would be sewing with some very expensive fabric, and for a big project, a prom dress, wedding dress, something like this, and we would mess it up. We'd mess it up and we'd have to go buy new fabric. And she said, isn't that cheaper than taking a class? Isn't that cheaper than anything else you could do? But you learned more from it because it was a real project that you screwed up. You learned more from that. So when you chalk up your failures as learning opportunities, you can then go into something with more confidence, because there's more fabric at the fabric store. right? If I lose every dime on this deal, I will have learned something, but I have more money because I didn't put all of my eggs into this one basket.
I love that so much. That's such a great nugget, and should be what everyone looks at when, especially investing in the beginning, for sure. Don't
People will
invest
be,
when you.
they're more willing to spend a lot of money on expensive education and expensive programs. Those have their place, but I don't think that they're the best choice for beginners. Exhaust the free resources first. And if you're going to spend a lot of money on it, something you're thinking of doing a $30,000 mentorship program, go put $30,000 or $50,000 into a deal. And then if you still like it, then maybe you should go get some mentorship. The more money you make, the more you have to spend on your education. It should be a percentage of your income. And if you have that no income, if you already spent $50,000, $100,000 on real estate education, I just think that that's people who are fooling themselves that they're making progress when they're really not.
Fascinating perspective. I love that. What is it about your career that makes you feel like you're fulfilling your why?
Because I have raised the ceiling on my income earning potential exponentially. And I think I was at a conference one time with a fund manager, and I was dithering whether or not I should start a fund. It sounds like a lot of work. It sounds like a business. I don't want to run a business. And he asked me a series of questions. He's, how much money did you make as a wedding and real estate photographer? And I said, oh, about this much. And he kind of puts his hand at a certain level. And he said, how much did you make when you switched over to real estate? And I said, oh, a lot more. And he put his hand way above there. He said, what about when you switched over to commercial real estate and syndication? I said, oh, it blew the lid off my potential again. And he put his hand up above his head. And he said, now I can't even reach my hands high enough to explain to you how much more income earning potential you have as a private equity fund manager than you do even as a commercial syndicator. And that made me take a step back and say, not that I want to become a fund manager, because I kind of still don't, but at the same time, realizing how much progress I had made on my income earning potential above working for my money, even investing in single, even investing commercial, the sky is the limit. The sky is the limit. And that has blown the lid off of my mindset and my vision. So everything that I'm doing to my why, which is to have more passive income, to spend more time with my family so that my husband can eventually retire if he wants to, there's no better way to do that than by earning a lot of money. You can buy back your time if you have money to do it with. Nobody's worrying about where the mortgage is coming from or how to keep the lights on.
It's so true. It's so true. You guys, we live in a society where these things are available to us. If you don't like it and you want to keep going in the rat race, don't hate on the people who decide to play the game and win.
Watch what the rich politicians and the powerful people are doing. They're investing in real estate so that they can get the tax deductions, so they can inflate their way out of debt. And they're passing laws that favor those types of things that they invest in. People say it's because they want to incentivize us to do privatized housing, which is a big part of it. One of the reasons they're investing in it is because they actually pass the laws that make this a great thing. Watch what they're doing and play that game. So I'll give you an example. When oil and gas prices shot up and my teenage kids were complaining about greedy, rich oil companies because they can't afford to fill up their cars anymore, I sat back and I said, well, I guess I know what company I'm investing in next. And so I started looking into oil and gas investing.
Yeah. I mean, I had Exxon in my portfolio and I was like, man, I wish I would have done my life savings in Exxon. At one point, it was like 150% gain. And I was like, oh my gosh. And it was only like 5% of my portfolio. I was like, oh.
Yeah. But you can invest in the real estate and the wells. And so it's still a real estate investment, but it's a commercial investment with the wells on it. So I started looking into that because as soon as you hear what greedy rich people are doing, this sounds terrible, but you say, okay, how did they do that? How did they get there? How do I get there? Follow their game and play their game, because I'm never going to be big enough to create the rules for my own game.
Absolutely. Once you get to that point, what you start to realize is it's not about like Exxon is like anybody can go do that. It's about how do I get to the distribution or to the who's making the barrels that, right? Like you start to understand that why billionaires continue to stay rich is because they're investing in like the necessary part of that, like you learn. It's crazy.
When energy usage tracks 1-to-1 with GDP, you know that oil and gas is not for greedy rich people. It affects the entire GDP, and it's definitely a trickle down kind of industry, even though it's hitting you hard in inflation at the pump. I think that having a better macro understanding can help you see ways that you can participate in the wealth while still being able to withstand some of the pressures. So I can totally afford the gas at the pump now because I invested in the well.
Absolutely. I love that. Favorite non-real estate or investment related book?
I say this one a lot: Crucial Conversations and Nonviolent Communication. And part of the reason I feel like I'm able to do what I do is because I spend a lot of time learning about communication, how to speak, a Toastmaster style. If I say be sure to ring a bell at me. So
were you part of Toastmaster?
I have not actually gone to a Toastmasters because I got invested in it or interested in it during COVID. So I just watch all their videos and I attend some video meetings. So getting up and speaking in front of a group at Toastmasters is probably on a bucket list of mine, but I have to get rid of the ums first because I know they're literally gonna ding me.
One of my favorite courses in college was a public speaking course. It was very, very fascinating for sure. We are like what of the 1% of people who aren't afraid of public speaking. I actually thrive.
Yeah. Take advantage of
fascinating.
If there's something that other people hate that you like, you should do that. So this Crucial Conversations book is about, it started out following successful people and figuring out what they all had in common. And they were thinking it could be this or it could be that. But really what it ended up was the way that they communicate their ideas makes them highly influential because people want to do what they want to do. It's also great because when things are tense, high stakes, emotional, you know how to deal with it because it'll give you the softening words to use so that you can have very tactful but candid conversations with people. The dichotomy is you either let it go or somebody's got to come over and teach you somebody's got to say something. But there's a middle ground. You say something with tact, with class, with respect, and it will teach you how to recognize those situations when you need to take a step back, and it will teach you what to say in those situations. And that has helped me immensely in working with my partnerships, not just in real estate, but with my kids and my husband and my family members as well.
Absolutely. It's not what you say, but how you say it. It's amazing. That's so cliche, but it's a cliche for a reason. If you could have any superpower, what would it be?
Probably what do you call it when you can get to one place without
teleporting?
Yeah. Just going wherever I want, whenever I want, teleporting up to the greatest places. I like being in other places. I don't like the act of traveling. Nobody does. Trains, planes. If I could just get to those places and experience all of that, I would love that as a superpower. It would change my life.
I mean, one of my goals is to be able to fly private. I think that I would enjoy travel more, find some joy in it if I was flying private, or if it was like, if I was the actual pilot, that would be fun too. But commercial travel is just getting worse and worse, especially with all this pent up demand from COVID. Cool. Last question. What's the best way for people to get a hold of you and learn more?
I put everything on my website. I try and make it convenient for people to reach out to me in the way that they want to. It goes back to my wedding photographer days when somebody would ask me, do you take cash? Why, yes, I take cash. Do you take Venmo? And I'm like, I don't know what that is, but I'm downloading the app right now. So however people want to contact me, whatever's convenient for you I'll make it happen. So my website is www.highrise.group. And if you do /contact, you can make an appointment with me on my calendar, free 30-minute call. I love 30-minute calls. So don't feel like you're bugging me or taking my time. That's one of the favorite things that I do other than probably interviewing on podcasts. So set up a call. Let's talk. I will tell you all about how the club works, how to get involved, how to join. And if you have different goals, I can help you talk about those and see if maybe there's a better avenue for you. And I've tried to design the club so it's a great fit for a broad crosscut of people, but it's not a great fit for everyone, maybe only 80% of people. So that is a great way. I participate on Facebook, LinkedIn, and Instagram. I'm Emma Powell 28 on Facebook and LinkedIn, and I'm Passive Income Adventures on Instagram. And that's just what we do, how we're working towards our passive income and how we want to spend our time. And it's just more like our adventures rather than a lot of specific real estate content, more lifestyle. So if you want to get to know me online, that's probably the best place to do it.
Awesome. I love it. We'll link the website in the show notes, make it super easy. Emma, thank you. This has been amazing. And I hope that we can meet in person soon.
Yeah, definitely. We meet in person once a month in Bluffdale in Salt Lake City. So if you're ever in town, you want to jump together, it's the fourth Monday of every month. And we'd love to have anybody who's in town and would like to come and network with some local Salt Lake investors.
Beautiful. I love it. Thank you again.
Thank you for having me.
Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.